Well, folks, not going to lie, I got a banger of a video here today for you. So here today in the market, the Dow, the S&P 500, NASDAQ, Russell got basically almost everything they lost yesterday. They got it all back here today, okay? There's absolutely no fear in this market at all. So first off, I want to show you guys proof that there's no fear in this market. Like, what do you look at to kind of judge that, right? Second thing we're going to talk about, which is where things get really exciting, how long does this last for? I'm going to take you through the last 15 years of the market. And I'm going to show you how long these periods actually last for before they end and people start getting more bearish on the market, okay? We're going to talk about when is fear going to creep back in the market based upon historical data and based upon calling it my feelings as well. And then the last thing we're talking about is how to position in a no fear market like we're in right now, right? How do you position, like what type of stocks do you want to be buying versus kind of avoiding in this sort of market? So we'll speak about that in this video as well, okay? Appreciate y'all joining me as always. Thanks so much for being here. Thank you for being subscribed to the channel. I appreciate each and every one of you. And Patreon. I will be making moves tomorrow in the Patreon portfolio through Fidelity Investments. If you want to see what moves I'm making, check out the pinned comment down there. You can see exactly what moves I'm making tomorrow in my portfolio. And the price will be going up on that for anybody that doesn't join the next few days. We are about to make a price increase on new members. So if you want to get in for the $19, then you'll definitely want to get in literally today. I would say pretty much the 125 tier, we're keeping that the same. The price is not going up on that one, but this one, it will be going up here very shortly. So just something to keep in mind there. And then once you're grandfathered in, you're grandfathered in, okay? Alrighty, so first off, let me show proof that there's no fear in this market, okay? First thing I like to look at is something like the AI investor sentiment. Now, we are in, this sentiment survey is insanely bullish. This is how investors feel about the market for the next 6 months. Now, first item I want you to pay attention to right there, 52.9%. This is as of yesterday, literally. 52.9% of investors in the market are feeling, let's just call it very bullish on the market for the next 6 months. We're down to only 20%, just over 20% are bearish on the market. Now that compares to a historical average of 37.5%. So we're about, let's call it over 15 percentage points higher in terms of amount of investors bullish on this market. That's incredible. As far as bearishness in this market, it's pretty much non-existent at this point in time. Only 20.9%. The historical average is 31%. So we're extremely more bullish on the market as an investor group, extremely less bearish on the market for the next 6 months than average, right? No, we just hit literally a 1 year bullish high, literally yesterday. That's a 1 year bullish high. So we're the most bullish we've been at any point in this past year, which has been a very bullish year in general, right? Now that compares, and look at how fast things can switch as far as bearishness and bullishness, because we hit a 1 year bearish high just back in November, actually, which is pretty fascinating to see from that perspective, right? If you look at the fund manager survey, it's the most upbeat it's been since January of 2022, before the Fed went crazy with all their rate hikes, right? We're the most upbeat since then. If you dig in here, this is really intriguing. The bank found sentiment improved to its least bearish level in nearly 2 years in December, from 2.5 to 3.4, while cash levels have continued to drop this month, down from 4.7% in November. So now they're at 4.5%. In October, they were 5.3%. So cash is dropping. Obviously, fund managers are putting money in the market, which is exactly what I told you guys was going to happen. 2 months ago, I called this out. I said, watch, these fund managers are going to try to chase this market. They're underperforming the indexes, and they need to play catch up. And 100% is exactly what's played out, right? In terms of economic outlook, most managers, 66% forecast a soft landing. I would say that's pretty dang bullish. There are still 23% expecting a hard landing. So if you're wondering, are there still more people to bring over the bullish side? Absolutely. Abso-dang-lutely. There's still a lot of fund managers to bring over to the bullish side. And maybe those people all get brought over in 2024. We'll see, right? But yeah, if you're thinking, have we ran out of bulls yet? Which is something you kind of like to think about in terms of tops in the market. Have you ran out of bulls? Is everybody that could be bullish already bullish? The answer to that is absolutely not. We still have a lot of people to bring over. We're getting to a much more bullish market now at this point in time, right? But there's still a lot. 23% expecting a hard landing. There's still a lot to bring over to this bullish side before it's all said and done, right? If you want to look at some stocks, I mean, these are no fear moves. The firm's up 429% this year to date. That's a no fear move. That's insanity. That's pure no fear. Like, people are not scared. If a firm stock's up over 400%, Coinbase is up 405%. That is a no fear move. Talk about not being scared. What about the hood? Look at Robinhood. Robinhood, 61%. This stock is up in the past month. 61%. This is no fear. So the bottom line is, there's no doubt there's no fear in this market. We're in a very bullish market. We're in a very aggressive market right now. Is it the most aggressive I've ever seen? Most bullish I've ever seen? No. That was end of 2020 going into 2021. That was the most insane I've ever seen. But is this one of the most no-fear markets I've ever seen? Yes, it is. Okay. So next questions we got to answer, and I'll answer both of these now. How long does this no-fear market last, right? And when will fear come back in the market? Well, check this out, okay? We've had 7 straight weeks now at this point in time. 7 straight weeks of what I would call very bullish sentiment numbers, okay? 7 straight weeks. And when I say very bullish sentiment numbers, that would be anything over a 40% bullish on the AAII investor sentiment numbers, okay? Now you might say, okay, how does this track in history? Is this the most bullish period we've ever had? I'm just going to show you the past 15 years since I got in the market 08, 09. Let me put it like this. This is not even remotely close to the most bullish period we've had in the market in the past 15 years, okay? Check this out. So this was in late 2009 going into 2010. 9 out of 10 weeks were very bullish, okay? These are all the bullish numbers here. These are neutral numbers, and these are bearish numbers over here. So clearly, end of 2009 into 2010, people started getting very bullish on the market. At that point in time, most people started to come to the conclusion that the recession worst was behind us and that it was going to get better moving forward. Obviously, some of those people already came to that conclusion kind of around February, March, April of 2009, but a lot of people still weren't sold. A lot of them are still pointing out all the bad stuff. And then slowly you started bringing more and more people over to the bullish side toward the end of 2009 and as we went into 2010. This is the most bullish period I could ever find in the last 15 years. Absolutely incredible. We had 24 straight very bullish weeks. 24 straight, folks. It started September 9th, 2010 and lasted all the way to February 17th, 2011. 24 straight weeks of people very bullish on the market, with this December 23rd number being a shocking 63.2%. We're very bullish on that week. Oh my gosh. Absolutely incredible, right? 24 straight weeks. Now, if we look at this time period here, this was at the end of 2011 through the beginning of 2012. We had 14 straight very bullish weeks in that particular time period there, right? Now, right here, this was toward the end of 2012, going into the beginning of 2013. We had 12 of 13 very bullish weeks during that time period there. Right here, this is toward the end of 2014. Going into the beginning of 2015, we had 13 of 14 very bullish weeks. So when you're looking at all this, and I'm showing you this one by one, you say, okay, we're at 7 very bullish weeks. The moral of the story so far should be, you could have a lot more very bullish weeks in a row before you finally break trend, okay? Check this out. This was at the end of 2016, going in the beginning of 2017. 9 straight very bullish weeks. Now, by the way, have you noticed something about the dates? Have you noticed something? I hope you have. That something is, guess what? A lot of these time periods are happening in the fourth quarters. People tend to get much more bullish at the end of a year going into a new year, right? I mean, look at how many of these we've looked at, and look at all these time periods where it's at the end of a year going into the next new fresh year, right? Which, guess what? Right now we're 7 straight very bullish weeks. We're at the end of a year, right? About to go into a new fresh year, right? Isn't that incredible? Check this out. Guess what? This is another end of the year going into a new fresh year. This is the end of 2017. We ran all the way until February 22nd week of 2018. 10 of 11 very bullish weeks in the market. By the way, if I recall, then shortly after that we had was it a Volumegeddon after that? And then we had a very rough end of 2018. I remember that. That was a vicious bear market we went into at the very end of 2018, right? 10 straight very bullish weeks. This started at the end of 2020. Guess what? Another Q4 started at the end of 2020 and ran into the beginning of 2021. Once again, that was one, in my opinion, that was one of the most bullish markets I've ever seen. That was the most bullish market I've ever seen, at least from the retail side. There was just like craziness. I've never seen anything like that. I don't think we'll see anything like that ever again. And if we do, it's going to be a decade, 2 decades from now. That was crazy time period, okay? This right here, 13 straight very bullish weeks. This happened, we can call it February 11, 2021 through May 6, 2021. Obviously, that whole end of 2020 into 2021 period was its own time period of just extreme bullishness, right? And once again, we've had 7 straight very bullish weeks here put together all in a row, with the highest and the most bullish actually being the most recent week, right? So, moral of the story is, in terms of if you're thinking how much longer can this last, we could keep this up for anywhere between 1 more week and potentially 2 more months of just knocking it out, very bullish, and people just remaining extremely bullish in this market. And remember, when people are remaining very bullish, they're going to continue to buy, right? Generally speaking, like, people aren't going to be bullish and not buy. They're going to buy, and they're going to buy, and they're going to buy stocks, right? So the moral of the story is this is probably going to continue on here for at least a little bit of time, right? It's just a kind of more of a debate. Does it last a couple weeks or a couple months? I think that's really the only debate at this point in time. A couple weeks or a couple months. No, in my personal opinion, right? I told you guys that I think there's going to be bearishness creep in Q1. At some point in time, we're going to have a big sell-off in Q1. I don't know if it's more January or more February, or maybe it's more March. Maybe, people come to the conclusion maybe the Fed's not going to drop rates or something like that. But I do believe we're going to have some sort of big bearishness creep in. It maybe lasts for a few weeks, maybe lasts for a month or two. But and the reason this bearishness is going to creep in, let me be very clear about this, okay? Let me be very crystal clear. Listen, they're going to blame it on something. I don't know what they're going to blame it on. Maybe they're going to blame it on what's going on in the Red Sea. Maybe they're going to blame it on inflation coming back in 2024. Maybe they're going to blame it on, maybe the Fed's not going to cut rates. I'm not sure what they're going to blame it on. They'll blame it on something. I promise you that. They're going to blame it on something. And there will be a moment where Wall Street just is looking to take some profits, especially in a lot of these big techs that have been huge money makers. They want to take some profits. I'm telling you, they don't want to take them right now in this tax year, especially given that Santa Claus rally and they need to play catch up to the market. But they're going to be looking to take some profits either in January, February, likely. And so that's likely to play out there. And then you'll see bearishness creep in, and the bears will come out of hibernation. Everybody's going to get rolling on. And that will be talked about, right? And that goes into kind of a little bit about Tom Lee's opinion. Because if you watch my video I put on the reaction channel last night that dove into the Tom Lee big interview he did on CNBC yesterday, right? And if you watch that, Tom Lee said he's bullish on the second half, but he basically said that the first half's not where you're going to make your money. So Tom Lee's not really bullish on the first half of the year, which kind of fits a little bit more into my criteria of, remember, I'm talking about this, pullback that's likely going to happen at some point in Q1, right? Remember, that's opposite of 2023. 2023 was just booming the first half of the year, right? We've gotten gains in the second half of the year, but if you're looking, where was the big money made in 2023? The big money was made in the first half of 2023. The little money's been made in the second half of 2023, right? And so kind of a little bit of an opposite situation. So I'm like, I could kind of foresee this happening, right? Now, this leads into this whole dealio, right? Which is, this gentleman tweeted out this, and I showed you guys this in a video over the last couple days here, right? About the market. And, I mean, we've never had a down year. If we go all the way back to 1950, we have never had a down year after having what has transpired in the last 2 years. So the market will likely be green anywhere between 7% and 19% in 2024. It's, it could always be a first time, right? It can always be a first time, and we break this trend, and then it's like, that was the one time it didn't happen. But likely will be green in 2024. But if you're thinking, how do you get to that green? You can get there a lot of different ways. One is the first half of the year is weak. Second half of the year is where you get your returns. You could also get the opposite. You could also get this scenario, which I've been thinking about is potential, right? Maybe a rough Q1 in Q4. But a really strong Q2 and Q3 where we really get our gains, right? That's a real potential. Imagine a scenario where, we get the big sell-off at some point in Q1, which is, once again, it's going to be blamed on something, but it's because they want to take some profits, right? And then suddenly, let's imagine election time comes, Q4. Let's imagine that's a big mess, freaks everybody out big time. And so maybe you have a sell-off in Q1, maybe you have another sell-off in Q4, but Q2 and Q3 are so strong, maybe those are a little bit of Goldilocks time, maybe the Fed's actually cutting there. I don't know. That's a potential, right? Also, this could be a potential as well, a strong Q1 and Q4, right? I mean, you never know. Maybe people continue to get more bullish and more bullish on this market as we get into January, February. Maybe earnings come out and are really strong, much stronger than a lot of people anticipate, especially from the strongest, biggest companies in the world, right? And then all of a sudden, maybe Q1's actually turns out to be great. And then maybe we have a weak Q2 and Q3 because people are scared about the election, scared about, the Fed and what they're up to, and, maybe all that's overhyped and overblown, and then maybe we have a strong Q4. You never really know, right? I would say this is probably the more likely scenario. So you got to understand, we could have a green year next year, but we can get there many different ways. No different than if you wanted to map out your location to your friend's house, right? There's probably, a lot of different ways you can go there. Unless your friend lives super close, by the way. If your friend lives next door, then maybe not. But if your friend lives, across town, there's a lot of different ways you can get to your friend's house, right? And so that's kind of the moral of the story in regards to this whole situation about 2024. Should be a green year. It's just, it might be very volatile and a little messy in terms of getting to those gains, right? So next thing we'll talk about, so we've addressed proof of no fear in this market. We've addressed how long does this no fear market last, right? Which is anywhere from maybe a week or two more to maybe a couple more months. When will fear start to creep back in? We've addressed that at this point in time. There's likely, I'm expecting some fear to creep back in Q1 at some point in time, right? So how do you position in a no fear market? Because I think that's the next important subject we got to speak about here. Where are the stocks you want to be in? Where are the stocks you want to be not buying and avoiding, and those sorts of things, okay? So here's how I personally think about this. So I look at something like an Affirm, right? Stock has been red hot this year. It looks like it's easy money, right? Because it just goes up and up and up and up and up and up and up. And I mean, it's just like every dip in the stock this year has been a huge buying opportunity, right? This is exactly the type of stock I don't want to chase going into 2024. That doesn't mean a firm's doomed and they're going to do bad. Maybe the stock does good. Maybe it's up another 50%, 100%, who knows, however much next year. I don't want to chase questionable business models that are hot stocks, right? At the end of the day, a firm is still a very questionable business model. We don't know what the profitability profile of this company is going to be. We don't know what it's going to be looking like in the next real big recession where unemployment goes up substantially, whenever that is, whether that's a year from now, 3 years from now, 5 years from now. At some point in time in the next 5 years, we're going to have a big recession where unemployment goes up substantially. And it gets pretty bad pretty fast. And we'll actually see probably significant deflation in the economy. And how does an Affirm compete in that? So as a long-term investor, I don't want to chase that sort of questionable story. Could a firm run to 100 next year? Sure. Who's to say it couldn't, right? But I don't want to try to chase a questionable business model that I just really don't know where that's at. If you're going to ask me where would I rather chase, I'd much rather chase another super hot stock like an NVIDIA. At least NVIDIA has the balance sheet, right? They got the income statement. They got the products. I mean, they got the moat around the business model. Affirm, I'm like, they got a lot of competitors, including one of my companies, PayPal, right? If I'm going to chase a hot stock, I'd much rather chase an NVIDIA versus an Affirm. No disrespect to Affirm. It's just, you got to tell me I got to park money in one for the next 3-5 years? Yeah, I'd much rather park the money in NVIDIA versus Affirm. If you tell me in the next 3 to 5 weeks, I don't know, maybe Affirm's the better play. In the next 3 to 5 months, maybe Affirm's the better play than NVIDIA. But if, I think in terms of years, I don't think in terms of, what's the hot stock for the next few weeks or the next few months or something like that. That's not my game, okay? Coin, would I want to chase something like a coin up 405%? No, not looking to chase something like this, right? And by the way, Bitcoin and Coinbase could do well in 2024. It's very much a potential, right? I mean, if I look at consumer getting better, if I look at, Bitcoin's been on a nice bull run, the stronger the bull run gets, the more, new people it attracts over. Hey, did you hear you can make some money over here? This is easy money, man. Look at how much I'm making on my Bitcoin. And so, I don't know. I mean, it's very possible Bitcoin has a good year and maybe Coinbase has another good year. I'm just not looking to chase that story. I'm not looking to chase it. And by the way, I think it's worth addressing. Bitcoin is basically a call option or put option on the Qs. And this is how this works. If you track Bitcoin over the past 5 or 10 years, pull up the Qs, and you're going to find that when the Qs are really getting hit negatively, Bitcoin's getting hit much worse. And whenever the Qs are doing really good, Bitcoin's doing even better. So Bitcoin's basically a call option, put option on the Qs. And the other fascinating thing is Coinbase stock is basically a call option or put option on Bitcoin. It's really, really fascinating. So, if you were to ask me, if you were to say, Bitcoin goes up, let's say Bitcoin doubles next year. It goes from, 43,000 to 86,000. Coinbase Probably more than a double. Let's just put it that way. It's probably more than a double. It's probably up 200% or 250% or something like that. If you were to tell me Bitcoin's down 50% next year and it goes from 43K to, 21.5 or something like that, I would say Coinbase is probably down, over 50%. And so it's just funny how that works, right? If the market's green, if the stock market's green in 2024, Bitcoin's likely going to be green as well. Okay, it follows the market around big time. It's just a call option, put option, basically on the stock market in general, right? Would I want to chase these guys, these housing related stocks? Well, it depends. It depends, right? In end phase, I'm not convinced that end phase is, everything's perfect there just because magically, the stock market's doing well. Let's just put it like that, right? Obviously, the stock has hit a big bottom. I don't know. I don't know what's going on with their business model. The numbers were so disappointing in terms of the guidance that the management team put out there that, I don't know. The interest rates are still very high. We got to keep that in mind, and we don't know where interest rates are really going in all reality. So I would say, Rocket, I said this would be an interesting buy in the second half of 2023. I called this out many, many months ago. And the reason being why Rocket's been an interesting buy is you just think about it from the context of the mortgage business gets no worse than the mortgage business has been over the past year or two in terms of new mortgages, in terms of refis, right? So for Rocket, it only gets better from here. It doesn't get worse, right? And so that's why I said this would be an interesting buy in the second half of the year. Am I going to buy a Rocket? Probably not. I would have already made my move if I wanted to make my move. It's one of those stocks that I'm like, that's probably a money maker there in the short term for the next year or two. But do I want to position to a Rocket for the next 5 years? Nah, not really my cup of tea. Redfin, I don't want any piece of Redfin. Zillow, I think is okay. I think it's okay buy. Am I going to buy it? No. Just because I think something's an okay buy doesn't mean I'm going to buy it personally. But I do think Zillow is probably an okay buy. Housing market probably gets a lot healthier over this next 12 to 24 months than it's been over the past 12 to 24 months. This should help Zillow's business model out overall there. As far as other housing stocks, Whirlpool I think is okay. I think they'll see an uptick in their business over the next couple of years as the housing market movement strengthens. Whirlpool needs people moving. That's the bottom line. If people move, they start to consider new refrigerators, new washers, new dryers, things like that, right? So Whirlpool's, I kind of put in the Rocket camp, is it can't get any worse than it's been in 2022, 2023 for that company. It only gets better from here. So, that's kind of my thoughts there. Toll Brothers and KB Homes, do I want to chase stocks like that? No. I would say, those stocks are in their blow off the top phase, which we don't know where this ends. A stock like Toll, maybe the blow off top ends at 125, maybe it ends at 150, maybe it ends at 200. It's in a blow off the top phase right now, and you don't know when that ends. When it does end, it's going to end, and it's going to end bad. I think there's a high probability stocks like Toll Brothers and KB Homes are about to hit their 10-year plus tops. What do I mean by 10-year plus tops? Well, by the way, before I go further in that, RH, kind of disappointing numbers. I really like RH, the company, but their numbers has been really disappointing. Luxury housing market, if that gets better in 24, that should help RH, but I don't know, man. FICO's a beast. That business model is just a beast, man. Incredible. I mean, the more I've looked in the company, the more I've just been impressed. But in terms of Toll Brothers, stocks like just home builders in general, right? I think they're in a phase right now that they're going to hit their likely 10-year plus tops. And these stocks go through these sorts of big boom cycles and bust cycles. And, if we look at the last one, Toll Brothers stock topped in 2005, and it took 16 years to get back to where it used to be. Okay, it took all the way till February 2021. So right now, Toll Brothers and these other home builders are kind of in their blow off the top phase. Once again, where's a stop? 125, 150, 200. It's impossible to predict exactly where the stock's going to top, but I do believe it's likely going to be probably a decade type top, and then it'll probably be in a huge down cycle for several years, and then it'll kind of bottom out again, and then it'll start coming back to life, and eventually it will get back to whatever it tops out at in this upcoming year, but. Yeah, man, I don't want to be positioned into any of those sorts of companies that are just in this little short-term kind of boom time of, interest rates being where they're at, so housing inventory is so low, and so the home builders are just benefiting in a huge way. I don't think that continues on forever. Let's just put it like that, okay? In terms of, what about the big dogs, right? The big techs, the Adobes, the Microsofts, the Amazons, the Metas, these stocks are always a fine buy. I mean, the risk-reward is still attractive on these stocks. I mean, when are they not a buy? Serious question. If Meta's 400, 500, it's still a buy. You look at the valuation metrics, it's still a buy, even at those sorts of numbers. Amazon's always a buy. Microsoft's pretty much always a buy. They're going to start generating some significant revenue from AI in 2024. Adobe's always a buy. I mean, those stocks are just kind of easy, always buys, right? Now, will those stocks return over this next 12 months, the type of returns they returned over the last 12 months? And the answer to that is absolutely not. No. Okay, they're not going to return even remotely close to what they returned over the past 12 months over the next 12 months. But with that being said, is there still money to be made in the Metas and the Amazons and Microsofts and Adobes? Yes. But it's kind of like, you squeeze a lemon and at first there's a lot of juice coming out and then there starts to become a little less juice. That's the way I look at these sorts of stocks in 2024. There's still some juice there. It's just a lot less juice than there was at this point last year when the lemon was full, right? Now, also a great time period to consider some hedges. If you're somebody that's net long in the market, you got a lot of money in the market and you're like, dang man, I should probably buy a little bit of protection here. Good time to be looking at some protection out there. You want to, some of the best times usually to consider some hedges in your portfolio are when you're in a big bullish market. When, the numbers are hitting and like everybody's starting to get very, very bullish in the market. That's many times some of the best times to start to consider some hedges. And you can, many times when you're in that sort of market, no one wants to hear put options. No one wants to consider things like that, right? And it's an opportunity to look, and many times you can buy insurance, protection, hedging puts for pretty cheap values because people just aren't buying them, right? They're just not looking out there and saying, I'm not scared. If anything, they're more focused on buying calls, right? This is a put to call ratio. It's pretty darn low right now. Pretty darn low. If you ever see this number over a 1, by the way, it's usually not a time to hedge. If you're over a 1, here's the way I'd put this. Okay, if you ever see this number over a 1 on the put to call ratio, that is people buying insurance after the accident's already happened. That's the best way to put it. It'd be like somebody getting in a car accident and then they try to get auto insurance after they already got in an accident or something like that. That's the way I would look at it, right? The lower this number is, the more likely it's telling you should probably at least consider some hedging in your portfolio, right? And so this is something I'm going to keep track of as we go throughout 2024 and see how low does it go. And the lower it goes, the more I say, okay, maybe I should consider a hedge here, hedge there, or something like that, right? What about these higher debt plays, right? A lot of people are starting to get interested in some of these higher debt plays, figuring, okay, Fed's going to start lowering interest rates. That's going to bode very well for a lot of these companies with big debt loads that, will be able to refinance at, let's call it, more attractive rates and those sorts of things. What about these sorts of companies? Well, if I'm going to play in any of those sorts of companies, I want to play in super high quality, right? I want super high quality. I'd want like somebody like a Wynn Resorts in this sort of environment. I don't want to play in a company that's got a big debt load just, because these are the hot plays right now. If I'm going to buy something that's got a big debt load and maybe they're going to have a more favorable backdrop for these companies, I want to buy high quality. A Wynn Resorts is about as quality as you're going to get out there when it comes to these sorts of companies, right? If I want to buy something that's consumer related, right? Let's assume we think the consumer is going to get in a better spot in 24 than they've been in 23 because inflation doesn't slice and dice them finally have a full year where they can breathe from inflation for the first time in several years, right? Well, I'd want to check out something like a Cheesecake Factory, right? Very high quality. They've been through the storm. They went through the great financial crisis. They went through the Rona. They went through the super high inflation. They've been through it all, man. They've been through it all. And at the end, they just, emerged a stronger and stronger company with revenues usually in a better place and net income's in a better place, right? And Cheesecake Factory, I wouldn't be surprised if I think revenues will be at an all-time high for the company in 24, and I think earnings per share will also be at an all-time high for the company in 2024. That's the type of high-quality company I'd want to be in this sort of environment. Low forward P, likely record revenues, and likely record earnings per share coming for them in 2024. And plus, I think they'll have better margins in 2024 as well, right? That's where I want to play. If I want to play something that hasn't moved yet, I like to be in somebody like a PayPal, right? This stock really hasn't moved yet. I mean, technically it has from the bottom, but, down 18% this year, this stock hasn't even started its move yet. The move's still coming in this guy, right? And so the way I approach a market like this, and I told you guys this a few days ago, balance beam approach, right? I don't want to go too far this way. I don't want to go too far that way. If other people want to get super bullish and all excited like that, cool. They can do that, right? I've been doing this for 15 years. I'm going to stay balanced in this market. I'm going to continue to buy stocks each and every week where I see opportunities. I'm going to continue to have hedges on the market. If I see more opportune hedges out there, I'll pick up some of those hedges as insurance and protection for my rather large portfolios, right? And just in case things go awry, right? But I never want to get too tied into this whole game of like feeling super bullish and super bearish on the market, because the more you get into that, the more you start to realize it's really more emotion than facts. Because there's always a lot to be scared of in the market. I mean, there's always so much to be scared of in the market. And it's always different fears. Like I told you guys earlier this year, the fears you might have in 2023 are not going to be the same fears and worries you have in 2024, which will not be the same fears and worries you have in 2025. It always is switching. It's always something different. And a lot of that gets back into emotion in the market. And she spoke to a friend yesterday. This friend, kind of down, just very depressed about the market. Didn't even want to talk about the market for pretty much the past year. They haven't wanted to talk about the market, right? And they told me their return this year, they didn't do a thing in their portfolio because they were so just mad about the stock market and what happened in 2022. They didn't make one move. They just had all the stocks they had. They never logged in the whole year. They said they finally logged in yesterday, and they've gotten a 34% return. A 34% return. This individual can many times be emotional and get all, don't do that, man. Just stay balanced. Stay on the balance beam. Don't go too far right, too far left. Stay balanced in this game. Don't get too bullish or bearish. Don't think you're smarter than the market and can time in and out. And, I'm going to get in, No, it's a fool's game. Fool's game, okay? That's a fool's game. At the end of the day, I think this is the most humbling year for every economist out there. I think this is the most humbling year for every Wall Streeter out there, and even every retail investor. Because a lot of people were predicting big recession this year, and it just never came, right? And a lot of people were expecting the stock market to be bad this year. I remember all the predictions at this time last year of these guys saying S&P's going to 3,000, 2,800, 3,200, 3,400. And where's the S&P 500 exiting the year? Probably 4,800? Probably all-time highs or very close to all-time highs? Jeez, right? Stay on the balance beam, man. Stay on the balance beam. Don't go too far to either side because it's going to hurt your portfolio more than anything, folks. And this is why I buy every single week. I'll be buying tomorrow in the Big Dog Public account. I'll be buying tomorrow in the Patreon portfolio. Once again, if you want to see my moves in there tomorrow, then join in there. Once again, we're about to go up on price. So this is like pretty much your last opportunity if you want to get in for the $19 tier there. That's pinned comment down there. But other than that, man, the rest of it, the rest of it's going to be what it's going to be. If we have the pullback at some point in Q1, great. We can buy. Am I going to make any specific moves because I think there's going to be a pullback in Q1? No. There might not be. I don't know. We'll see, right? I'm not going to make specific moves because I think something might happen in the market. Might not. Maybe Q1, the whole quarter is just a booming and we're just flying. Great. My portfolios will prosper. That's fine with me. All right, guys. Appreciate you joining me as always. Much love. Thanks so much for being here. Thank you for being subscribed and have a great day.